So we begin by looking at the liquidations, just to remind ourselves that we need to be careful. So about 350 million has been lost due to liquidations in the last 24 hours. That's just over 56,000 traders who are liquidated. Not actually all that bad. Down 14% from 24 hours ago. So last time we looked at a collection of on-chain analytics, providing more insight into what's going on with Bitcoin. Today, we're going to look at the Crypto Fear and Greed Index. So just go down a bit here, and you can see it describes what's going on. So 25% from volatility accounts for 25% of it. Momentum volume, again 25%. 15% social media. 15% surveys. Currently paused. 10% dominance. 10% trends. So we pull Google Trends. So it's just a broad range of data. As it says, extreme fear can be a sign that investors are too worried. That could be a buying opportunity. When investors are getting too greedy, that means that the market is due for correction. So, that makes sense. When people are too greedy, all they can imagine is that the price is going to keep going up. And they imagine prices of millions or tens of millions. That mentality has served them well. Basically, if they bought in early, they saw the price double, double, and double, and double. So now they're sitting there with a small fortune, or maybe large fortune. And that was largely made by the mindset of being more and more aggressive. That is what was rewarded. So more and more of the market consists of people who are aggressively bullish, forgetting that, remember, winter does come. It's not day all the time. You do have night. So you have bull markets and you have bear markets. You have a fair price if you say you use the stock to flow model. But as the greed grows, it always overshoots the fair price to extreme levels. At some point that bubble bursts and the price collapses until it goes well below the fair price, from which it can start building a foundation and growing again to repeat the cycle. So here you have the Bitcoin price and the Fear Greed Index. So Crypto Fear and Greed Index. I hadn't really heard that before because, if you're trading stocks, shares or currency, you didn't have this. You might use the VIX as or some kind of measure of fear. You could use the daily range, just look at the volatility. That kind of does a similar thing, though not as refined. In a way, you can see down here that this is taking those factors into account. So I would have been familiar with maybe keeping an eye on volatility for a similar role to what this index does. I would also be aware of using social media, maybe Google Trends. I wouldn't have been following dominance or surveys. So let's see this in action. The basic idea would be that when the fear and greed index is very low, so maybe you can think of that like, say, if you use the RSI, if the RSI is below 30, that's typically a good time to buy, unless you're in a bull market. So if you wait, if you notice that the fear and greed index is very low, so this is like 14, you should be thinking of maybe dollar cost averaging. Just adding maybe €100 or €1,000 or whatever level you're working at. But if the fear and greed index is low, from here I'd say under 20 would be a good time to be accumulating. Or if there's too much greed in the market, so if the fear and greed index is what is that? 90. So I was thinking of RSI. So there you'd normally have, it's if it goes up to 70, maybe 80. You'd look at whatever market you were working on and get a sense of, okay, this seems to peak at about 80. That's a good time to maybe sell a little bit, trim until you get a dip, and which would provide an opportunity to buy, unless something more serious was going on, in which case you don't need to buy. You might look at another market. So here, just looking at this now, I don't have a magic number. I don't know that an answer, like I won't be able to say, oh, if it's higher than 70 you should sell. But have a look yourself and see what you reckon. I basically I was considering buying once the fear and greed was less than 30, particularly when it was down here. I started looking at it really when it was around here, and because that seems extreme and the price was low. So you had that was a low. The market was trying to figure out whether 30,000 was going to be a foundation. People were pricing in, oh, it might crash to 10. I was reducing my leverage, because if you're leveraged, you can be wiped out of the market, and then as it shoots back up again, you've nothing. So you have to be doubly cautious if you're leveraged. So since the fear was down to such extreme levels, even at leveraged, I kind of feel, no, I don't think it's going to fall to 10 now. Since then, the price has broken to the upside. It's still, repairing the damage done from the fall from the recent peak of 64,000 or so. It'll probably bounce around a bit. We'll see. But the fear and greed index has recovered rapidly. So now the market is no longer, oversold. It doesn't. It was extremely oversold. The fear was very high, very recently. So what's this? July 20th, 21st. But now it's back to a more regular level. Here, it's neither overbought or oversold. So the fear and greed index is kind of calm. But that's the point of this. It's just another way of viewing what's going on, what mood the market's in. If it's pretty high, you want to kind of step back a bit and go, oh, maybe I should trim things a bit and wait until there's a better opportunity to purchase. Or if it's very low, I'd feel more confident that my bigger view is we're in a bull market. We've had a halving. I think this 5,000 is not going to be the high of this. I'm thinking more 200,000-300,000, somewhere there. I could be totally wrong, but that's my base case. That's my mentality. So to me, this is really cheap and fantastic value. So to be able to buy something which I believe is going to reach 200,000-300,000 at 30,000, that's kind of like a tenfold on the upside market, which you don't really get all that often. Though, who knows? It is risky. There's always risk. So that's the crypto fear and greed index. It's a bit different. It's not your regular technical thing. It's not just a moving average or that kind of thing. At the same time, it's quite similar to a lot of other, if you've used technical analysis, it's quite similar. That if essentially it feels like an RSI, where you're waiting for the RSI to dip to maybe 30 or 40. It depending on what market you're in. You get to see, okay, when it dips, it falls down to this level, then it stabilizes, goes up to maybe 60, struggles around there, and then when it enters the really kind of boom part, it never dips below 60. It goes to 60, 70. It might hang around nearly 80 for a long period. So if you're sitting there going, oh, I'm going to wait to buy when it's 30, you just might not get that opportunity. So that's just what this reminds me of, more coming from having traded in shares and other things and worked with MACDs or moving averages, RSIs, and so on and so forth. This is in that way, this feels quite similar to those things. So if you've got trading experience already, then this should feel quite familiar. I also notice that Alan now has done another post, and this time, he's pointing out the current Bitcoin. So now it's 58 minutes ago. So he's looking at various ways where he's kind of seeing this could be a nice time. He's quite bullish on Bitcoin as well, but I like this one. So it's possible to, so again, he has a 1, 2, 3, 4, 5, giving a list of different ways you can look at the market. Last time we were looking at on-chain analytics. This is another collection of things. But I like this where it's possible that the correction could stop at 20 exponential moving average, I think, EMA. Because why? 20 EMA cross 50 EMA on 21, or very recently, a couple of days ago, whenever the 20-day EMA crosses the 50, Bitcoin price rallies, regardless of which part of the cycle it's at. So then he has a nice little chart. There it is. So whenever that happened previously, that was a good time to buy. That was a good time to buy. That was a good time to buy. So that would suggest that now is a good time to buy. Again, he doesn't just use one index, he provides a collection. So if you haven't already started following him, I'd recommend that you do. I'd also click on I'd turn on the notifications, since he's such a regular poster. That way, I was able to get these new posts just today. Next, I want to go through various thinkers who've influenced me. Many of them are essentially incredibly successful traders who I've got the highest regard for, and they have suddenly had their eureka moment, and they're all incredibly bullish on Bitcoin. So that, to me, is great. I mean, I like knowing that I'm not just doing something because that makes sense to me, though fundamentally in the end my situation is unique. I'm balancing various things, and so I feel that risking this amount in leveraged at this amount, or the particular strategy that I'm going to follow, how aggressive am I going to be, etc. That's going to be that's me, and it's each person has to decide that themselves, knowing that they can lose. But if I see not just one, but 1, 2, 3, 4, 5, 6, 7, many of, to my mind, the greatest traders out there, if they're all seeing the same thing as I saw, then okay, maybe I haven't that crazy. That it's more these other people who haven't looked at this, who haven't studied anything, who are just living in the pre-crypto world, in the pre-digitization world. Yes, they might not see the same thing that I am, but I'm comfortable with the fact that, well, it's because they don't know. And, they're not reading it. They're not learning about it. They're stuck in the tape cassette and modem world. Though time will tell. So I want to select some content more based along that topic, or that coming at Bitcoin from that perspective, because to me that was important. I don't know whether other people feel the same way. So till then, though, that might be maybe a week or two. I'll have to. That's slightly different because the previous ones I was just able to go to my source, look at charts, and do a quick summary of them. This is going to be a different collection, and I'm just going to see, have to figure out what order to put them in, and what how they naturally fit together, what the narrative or whatever it is. But that's broadly what I reckon would be interesting and relevant to look at next. If you have any thoughts or suggestions, please put them in the comments. They're always appreciated. Thanks.